Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Tuesday, last day of the month, July 31st, 2018, and this is the daily report for gold and silver. Gold managed to close higher on the day, up about $1.40. This is basis the December contract of gold at $1232.90. We did cover all short positions. We'll talk about that in detail as we pull up our first technical study chart. Silver also posted a gain, a moderate gain of under 1 cent, closing at $15.54. And that was all in light of a stronger U.S. dollar, up about 21 points, closing at 94.32. In terms of the industrials and equities themselves, about a 100-point gain in the Dow Jones Industrial Complex at 25,415. Composite also closing higher, gaining 43 points, a little bit over 0.5% at 76.73. And then lastly, the S&P gained almost 0.5%, gaining 13 plus points, closing at 28.16. So traders, extremely quiet action as the FOMC meeting commences today, of course concludes tomorrow. Gold did close up, but just fractionally higher, up about $1.40. This morning I did send out a special trade alert recommending that we cover our short positions, be it in October or August, as December has now become the most active and front-running futures contract. Traders taking that short call did make a small profit of about $200 per COMEX contract. And on today's show, I want to talk about our strategy for tomorrow as a statement and policy announcement is released by the Fed at the conclusion of this month's FOMC meeting. Of course, traders are expecting that there will not be an interest rate hike this month. According to the Fed Watch tool put out by the CME, there is a 93% probability that the Fed will not implement any kind of rate hike. What traders will listen intently to and for is for the future direction of the current monetary policy and whether or not there's been any change or shift from the perceived 2 more rate hikes this year. Realize that recent statements by President Trump and Larry Kudlow have kind of put the Fed in a pickle in which, regardless of their action, it's now going to be weighed against statements made by President Trump. In other words, if the statement tomorrow is a little bit more dovish than the last statement, it will be perceived that there was an influence by President Trump. And if it comes out as hawkish or more hawkish, it will be perceived as a defiance against the president. In other words, it's a no-win situation. However, my sense is that they will hold their stance. They will indicate another 2 rate hikes to come in this year and remain at that same pace and level of hawkishness that we saw during the last FOMC meeting. And traders, you might have noticed that on this daily chart, there's a considerable bounce, and that is because it is a continuous contract, and this latest candle, today's candle, represents the December contract, where these prior candles represented the August, which is currently at $12.23, up $1.80, and today was the last trading day of that contract. And that was one of the reasons that I looked to cover our current short position and put us flat going into tomorrow's conclusion of the FOMC meeting. Because my strategy is as follows. If tomorrow's FOMC statement is as hawkish or more hawkish than current market sentiment, meaning that they will announce that they're going to stay the course and to anticipate 2 more rate hikes, we should see the dollar gain strength from that and an erosion in price in gold. If that's the case, we would look to sell the December contract of gold and place our stops above 1238. If tomorrow's statement indicates that the Fed has implemented a more dovish stance, we should see the U.S. dollar come down in value, and we would also see gold moving to higher ground And depending on the statement, that might in fact trigger us to issue a buy signal. In any case, we will send out a special trade alert to that effect. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.